All right. Hey, wanted to dig in more on these horizontal breakouts. I've got about 10 charts. This may be the longest video. I'm hoping less than 30 minutes. But by the time I'm done with this and sharing this with you, hopefully you'll have a good feel for what the potential is on these, again, horizontal breakouts. And there's several names for those. And I'll allude to that as we, go through these charts. But I want to start with this one. And this is Spotify. And this 3D, by the way, that stands for 3 days. And you can see up here Spotify. What I'm going to do is, as I go through these, I am going to hit the play button so we can see price action live. But before I do, I'm going to have one indicator. I just want to spend a second on this. It's the 50 SMA. And what I love about this is that the way it's coded in, you can see that, see right here where it's green, and then right here where it's red. The reason why it's green is when price action is above it, the moving average will automatically turn a green, and then say right here, when price falls below it, it automatically turns red. So here's an example right here. Prices above it automatically turns green. And the thing I want you to also keep in mind, so that's the primary use case. Again, let me just say one more thing on that. But when price is above it, there's really not much to worry about, as you can see. And this alone, just this alone, turn your trading into, you'll be better than 99% of the rest of the world. As long as price is above it, and then if you make it this simple and become robotic, when price falls below, you just get out. It's abort. And when I say abort, I mean like Mayday. There's going to be 3 different levels where you can sell. But this is the dead last. So when price falls below this area, in right there, right in there, that's where you get out. But more to come on that on a separate video. And then the other thing I'll say is that when you look at this 50 SMA, you want to make sure that when you're buying, it's in an uptrend. So this is pretty obvious, right? However, if you look right here, that it's not obvious. It's going sideways. Let me see if I can scroll over to the left a little bit. Yeah, here we go. So right here, it's going sideways, going sideways. And I'll probably say this a lot, but more to come on this, and I'll explain why or how we deal with this sideways, this chop. All right, so let's jump in here. And what I'm going to do is I'm going to move. Actually, before I do, let me illustrate my point. So let's draw a neckline. Remember the neckline. The reason why I chose it right there, that was the all-time high back in, you can see down here in 2021. So this neckline, again, here's the neckline. This is a multi-year neckline. And the more years we have, or the more months we have, ideally more years, the bigger the bounce will be. And we'll dig into that too here in a second. But this is what we're going to focus on for the video, okay? And what I want to do is we're just going to watch this live. So now I'm going to hit play, and I want you to just watch it. This may be a little mundane, and this is the fastest it can go. This is a 10x speed, but I want you to get the drift. And as you watch this, just pay attention right now to how price action is above this green line and how the green line is trending up. Let's pay attention when price gets to this neckline. Scoot this over a little bit. And we already know what's going to happen because we just rewound it. But you can see, and by the way, here's the key. See how price just broke above it right here, barely? But this is where we start to buy in, right here. This is the ideal situation. And as we talk, I'll share with you where to put that stop loss, but that stop loss will be right below that neckline, say 2%, 3%. You keep seeing these lower indicators. I'll explain. We'll dig into, what these are, how to use these later. But anyways, now is the opportune time to buy. Set that stop loss at the same time. Let's hit play and see what happens. And then here we go. All right. So now we're live, meaning the price action where we're at is current day. But if I were to measure this, it may not look like much, but it's about, let's say 20, call it 30% in about 24 days. And then the other thing that you're going to see me do is Fibonacci's, or the Fibonacci sequence. There's different ways to do Fibonacci sequence. This is the horizontal Fibonacci sequence. And again, more to come on this, on how to the differences between the Fibonacci's, what is the Fibonacci sequence, and how do you use this in trading. But we're going to place it anchor point at this all-time high. We're going to come all the way down to this section right here, this low point. We're going to swing it over. But one thing I want you to know is when we go through the rest of these videos, when price breaks out of this neckline, it's a matter of when, per se, not if, when price will find this level up here, this 1.618. That's called the golden zone. This is a classic extension level. And yes, price will find these two levels as well, but this is ultimately where price will find itself. And then the other thing is, remember, these are measured moves where we go from the neckline down to the deepest point. So just like that. And if I were to place that up here, this is in essence where price will eventually find itself. All right, so that's what we're going to do on the next few charts. Hopefully that makes sense, and let's jump into the next one. So here is the Home Builders ETF, and I'm going to hit play, and we're going to actually, before we hit play, let's draw a neckline. Here's the all-time high right there, and I'm going to extend this out. So there's your neckline, okay? And remember, when price is down here, we really don't know what it's going to do. And that's one of the reasons why I love waiting for price action to get above that neckline, because it's a low risk, high reward. But let's hit play. And actually, before I do, let's turn on that 50 SMA. So you can see price is above it, and it's starting to trend up. We'll hit play. You can see the 50 SMA, the green one, starting to trend up. We love that price is above it. I'm going to extend this neckline. Looks like we're going to exceed it. All right, going to hit play. So by the way, you see what happened when price got up to the neckline that got rejected. That's why in all the readings and the trainings I'm doing, we never ever want to buy when it gets to that neckline, because you have no idea what it's going to do. And this is a classic example right here of it getting rejected. I haven't mentioned this pattern, but I want to say this real quick. Do me a favor. I want you to GPT what a cup and handle is. So for example, here is the cup, right? These dotted lines, if you can see, that's that rounded bottom. And then the handle is this section right in here, okay? There's your, if you can see that, that's your cup and handle. Do me a favor, GPT that or whatever AI tool that, that you prefer, and dig into what a cup and handle is. It's one of, again, the most bullish patterns of all time. So you can see, by the way, we broke out, okay? We're definitely above the neckline. Question is, have we bought in, yes or no? The answer is absolutely yes. So let's hit play again. And again, just pay attention to that 50 SMA. See how it's trending up right now? Love that. We're still in. Actually, I'm going to hit pause. Oh, actually, here's a good pit stop right here. See how price fell below that? We are 100% out. So anyways, yeah, we would abort right here, which means we would be in 100% cash. Let's see what happens. So boom, price was only below it for a short time. And then, let me just illustrate a point. When price pops back above it, even though we sold, who cares? We just buy back in. So here we are now, current day. So you can see at the time of recording, this was yesterday, Friday the 13th, December 24. I'm recording this on Saturday. But you can see right now, price is literally resting on the top of that 50 SMA. And the question is, are we in or are we out? Currently, we are in, and we will know more in the coming days or week as to what we will do next. Here's one everybody loves. This is NVIDIA, and I've got it ready to go. Actually, here's the all-time high right here. This is November 2021. So let's draw that neckline real quick so you can see my point. I don't remember how far this goes out, but remember too, if we were to buy in right here, now 2020 hindsight, everybody knows that NVIDIA has just been electric. But again, if we were down here, we're like, I don't know. That's again another reason why I love buying above these necklines. So let's play this. Actually, let me hit let's get that 50 SMA on there. So you see how price is above it? Actually, price is way above it. The 50 SMA is curling up. So we are in. Now you can see right here where price is well above it. And let me get my drawing tool. See right here, there's no candles. They call this a gap. So it gapped up. Cryptos don't do this, but it's very common for stocks. But anyways, you can see this section right in here where price just shot right up through that neckline. And NVIDIA is going to go into another pattern. It's going to, I think, if I remember right, it's going to start to go sideways. And I want to spend a second on this as well. Yeah. So go sideways. They call it range bound. Boom. I'm going to stop right now real quick. I'm going to draw. All right. So you see how price, if I squeeze that in there, right there, kind of zoom in a little bit. It's not precise, but it's good enough. And I'm going, let me see. Just want to make sure this is accurate. Yeah, there we go. So see how price is just range bound, popping up and down inside this rectangle? Rectangles are another pattern. And the gentleman that kind of coined this term, the rectangle, was back in the 1950s in the US. His name, Nicholas Darvis. And he, of all things, was a professional dancer. He and his sister would travel the world. As he was traveling, he was trading, and he's a legend. He's passed away, but he's the one who put these rectangles on the map. But the one thing I just want to share with you is these are still considered horizontal breakouts. And when we find these, because I've got a couple examples coming up, but again, where that black line is I drew, it's still a horizontal breakout, even though this is a rectangle. And these down here, remember, these are the rounded bottoms or the parabolas or the cups, however you want to call it. But rectangles are also really electric. So a lot of times on these powerful stocks with these neckline breakouts, they will do this. This is one of a few different moves that they play. So they'll shoot right through the neckline and then just go range bound. And we can talk more about how to play these range bound, because you can see right here, the price itself was range bound for 228 days. That means if we bought this, our money is locked up in this thing, and we're not really making any money for 228 days. So we can talk more about how do we play these, how do we recognize these. But let me just hit play. And while you're looking at this, just look at that green line. I'm trying to keep the chart here so we can see the whole move. You can see everything's good. It looks fast right now, but in real life, this is like moving like molasses. So here we are real time. And this is going to be an extreme example because NVIDIA is the darling of Wall Street right now. But let's just do a measured move real quick so we can see how much money we would have made. And if we would have bought right in here when it gapped up above that neckline, and we're at current day, so you can see right here, 568 days later, we made 303%. Awesome. So hopefully some of this is starting to make sense. Let's jump into Bitcoin. And let me draw a neckline. So there's our neckline, because right here is November of 2021. That's the all-time high for Bitcoin. Call it 68,000. And now, remember, when price is down here like this, we don't know really what it's going to do. Again, let me say one more time, that's why I love waiting till price gets above these necklines, because it's a very low risk. And what I mean by that, if price falls below this neckline, set that stop loss, say 2, 3, 4%, no big deal. But then the reward is when it breaks above and it just goes up like on some of these previous examples. Okay, so let's hit play. Actually, let me get that 50 SMA on right there. And let's hit play. So take a note at that the 50 SMA, it's starting to turn up. Price action's above it. Love the angle of this SMA. So right now, everything is good. We're still in, even though it's extremely volatile, but all is good. And again, we can talk more later if you want to start to nibble in when price is above it, because you definitely can. I'm just trying to improve our odds of winning. All right, here's a classic example. So these are called false breakouts. And this is why we want to set these stop losses. But you see right there where price actually broke above it? See this wick right there? Price actually broke above it. And so this is where we would actually start to nibble in. Then look what happened. Price fell below it. And this is precisely why we want to have that stop loss. All right, so let's hit play. Boom, price is trying to figure out what to do, but didn't like it, right? Can you see now why we don't want to go all in when price gets above it? We just want to nibble in with a tight stop loss. Let me extend this neckline. Now, clearly, we're in a good situation. We are definitely in. We want to raise our stop loss just above that neckline. So in the event price actually comes back down and falls through, it's rare, but it does happen, especially when it gets this extended of price. It typically does not come back down, but in the event it does, we're going to raise our stop loss just above that neckline. And then I keep saying this, but more to come on how to use our stop losses and how to raise those as price goes up. Let's hit play. So here we are. This is current day, Saturday, December 14th, 2024. Because remember, cryptos are open 24/7, unlike stocks. Let's just measure this. So when price did finally break above, you can see how much more electric, I want to say, cryptos are. So in 42 days, you would have made 50% on your money. Here's one I love. Here's a stock. I was talking about stocks aren't electric-ish compared to crypto, but take a look at this one. So two things. Let's get this neckline because here's this all-time high. I'll extend it out here. But wait till you watch. Wait till you see this guy. This is one of my favorites, and this is pretty recent in terms of when this thing literally blew up. All right, playtime. Again, it's really, do me a favor, it's really this simple. When you see price above that green line and the green line's trending up, we're golden. It's that simple. Even though this is, I mentioned this is moving really fast, but it's like watching paint dry. It's extremely slow doing this real time. You can see right there, price fell below it, but it popped back up. You can see right now, price is jumping above. Watch where this thing goes. And this is not an anomaly when you see price action like this on these explosive breakouts. But and this, again, it stopped because it's real time and the stock market closed yesterday on Friday. But let's measure this real quick. So we would have bought in right here. And if we were still in it, 88 days, you're up 164%. Here is Google. So let's turn on the 50 SMA. And let's draw this neckline from the all-time high. There's a reason why I wanted to show you Google. Yeah, so now look at price actions above it. It's green, it's trending. I love the direction of the moving average. So price is approaching the neckline. See right here? Right there, price popped above it. Remember what I said, false breakouts are they're very common. And this again, we would actually start to buy in here. It would be a small buy, but we put that stop loss right below it. And with these stop losses, yeah, we're definitely gonna lose some, but if we're only losing 2-3% of a small buy-in, it's not a big deal because our winners are gonna by far outpace our losers. So now price is flirting with that neckline again. See why we don't want to go in? Now is when we're going to start to buy back in. Here's what I wanted to share with you. These are called breakouts, and then they pull back to the neckline. If I remember right on Google, should come back to the neckline. Yeah, it did. All right, so let me extend this. This is textbook. Let me explain this to you. So we got the breakout right here, and then price right here rolled over, and then it came back down to the neckline. I call it a BRB. So here is the breakout. It rolls over. Here is the retest. So the breakout, excuse me, the retest, as well as the bounce. And right now it's in the bounce phase. These are very common, and this is where the smart money, the Wall Street money, actually really backs the truck up, is when we get into these pullback, these retest areas. And I want to share that with you because we really haven't seen a good pullback or a retest or a BRB since I've been sharing some of these videos. So this is another possible scenario when we get these breakouts on these necklines. I just want to share this with you too. We've got another scenario right here. This is in essence another example of another horizontal breakout. And by the way, so we're at current day right now, so we can't go any farther into the future. But this will be interesting as well to see how this plays out because we've got an all-time high here, right there. We've got an all-time high right there, and you can see price is back to its all-time high. So we've got this kind of rounded bottom. It's actually like a nice little cup and handle. So this section in here is the cup and here's the handle. But I fully expect price action to break out of this horizontal neckline here pretty quick. Here's another cool one. This is a commodity. It's cocoa. Yeah, cocoa. So over here is 1980. That's the all-time high. It's a 44-year-long trend line or neckline. So I'm going to hit play. Actually, before I do, get the 50 SMA on, and then watch this one. Remember, these big breakouts can happen with anything. You never think it would be with a commodity. By the way, I've got the Fibonacci extension placed up here, which I haven't done on some of the prior ones. Probably go into detail on that. Yeah, we had a false breakout right there. Fell below the neckline. Flirting with the neckline, kind of. The great example of why we don't want to have a big buy, because see where price is right here, just fell below. Actually, it fell a lot below. Gosh, if I could speed this up a little bit, I think I would. All right, so price is flirting with that neckline again. So we're still in cash, right? We haven't taken a position yet. We haven't bought yet. Price is still flirting with that neckline. Got rejected. Got rejected again. Got rejected one more. Clearly, it got rejected. So hopefully it makes kind of sense too why we never want to buy when price is right below that neckline. This is a perfect example of all the rejections, let alone right here, this false breakout. All right, I think we're getting close. If I remember right. I'm kind of fast forwarding a little bit, bouncing around because it's taken a while to get up to the neckline again. So remember how I said the bigger the base, the multi-year base. So this is a 44-year base. Okay, so we got price above the neckline, but the more years, the better. So it looks like the breakout's going to stick. We would have bought in right here, but look what happens. It's going to go right to that 1.618, and then boom. I'm going to stop right there. But this is what I wanted to share with you. It doesn't happen every time, but it definitely does happen. But this is a classic example. It's just beautiful. And we'll talk more about where do we sell, what does that look like, et cetera, versus just relying on this 50 SMA. But anyways, Coco, love that one. Let's take a look at Netflix. We've only got a couple more. All right. So let me get the 50 SMA on there real quick. So right now, price is below that 50, actually, excuse me, it's above it. 50 SMA is trending up. Coming up on the neckline. Hit pause real quick to extend it. Got rejected. Flirting with it. So right here, we would definitely be in small position size, tight stop loss, but we would definitely be taking a position on Netflix. Here we go. So here's current day. And again, it may not look like much, but let's just measure this because this thing is still going. Let's say we bought in right there. So 85 days, we're up 32%. Gotta love it. This is the Dow Jones Industrial. Got the neckline, got the 50, and then let's hit play. This is actually a good example. So price, I'm messing with the neckline. Price definitely made a clear break. Price above the 50. 50 is trending up. Textbook. It should be coming to current day soon. And then boom, look at that beauty. All right, just a few more, okay? So these are ones that I'm waiting on. So these are current day, but this is coffee. And the reason why I like this one too is this thing has been, man, all the way, see where my cursor is? This is like in the 70s. Yeah, 1970s. It reminds me of the cocoa. But once this baby breaks, we're definitely going to be buying this little bad boy. Because this is, by the way, this is that Nicholas Darvis rectangle. So you can see the bottom of the rectangle, the top of the rectangle. And that price has just been going range bound, hanging around on there for, I don't even know, what is that, 50 years? 40? 50? Long time. But we're just going to keep an eye on it for when it does break out is when we will take a position on coffee. I'm going to leave you with this one, okay? This is the Mac Daddy of all charts. This is MicroStrategy. And I won't share with you the fundamentals on this, but this thing is a hoss. This company actually owns about 2.5% of all Bitcoin. They make about $500 million of profit every day from Bitcoin that you can see right here. And we're super zoomed out because this right to the far, far left, this is like 1999. So this is about a 25-year neckline. And look, we just broke out. So the question for you is, are we in or are we out? And the answer is, you are correct. We are in. But let me just place these fibs because remember, stocks, cryptos, they love fibs. And I'm going to place it at this anchor point. That's the all-time high back in like 1999. And I'm going to place it right here as the all-time low and swing everything over. But this is where it gets absolutely insane. Let me just leave you with this. Because by the way, if you had to make a position on anything, this might be it. And I say that because for every percent that Bitcoin goes up, MicroStrategy goes up like 4 to potentially 6%. So you can see right here, price is just above that neckline and price is at $408. Well, check this out. Remember what I said, how when price breaks above the necklines, it will find that extension, that 1.618. That price at that extension is $18,473. And remember, price right now is at $408. This is crazy, but this is the first time ever a stock's ever been in this type of position ever in the history of the stock markets. I wrote a dissertation on this one, which I won't go into this company and why it's literally a unicorn, an outlier. But let me just measure this. But if we measure from where current price is to where this 1.618 is, that's 4,300%. Who knows how long it'll take to get there? But what I do know is I feel really comfortable. It's not a matter of if, it's a matter of when. So anyways, I hope that was helpful. And that's a wrap at a very high level on these horizontal breakouts, rounded bottoms, or as Dr. Eric Wish would say, green line breakouts. All right, thanks so much.